Welcome to the Wise Money Guys radio show. I'm your co-host, John Scambray. I'm here with my partner,
Giuseppe Visconti.
And we are certified portfolio managers and long-time investment advisors that specialize in helping people who are retired or about to retire manage their money. So we've got a pretty big agenda today. Obviously, there's a lot that has been happening, whether it's the conflict in the Middle East.
Yeah, still uncertainty out there. Nothing's been resolved, and we're just kind of a wait and see. And markets are in that same predicament, right? Wait and see what's going on with the war, especially oil. There's been some fluctuation with gold. We'll touch on how the stock market's been reacting, what the stock market might be telling us as far as what the stock market thinks is going to be going on with the war. Is it going to be long-term? Is it going to be short-term?
But where I was going is that I think that the reaction is an overreaction.
What reaction?
Stock
market, to, oil,
the oil
people's reaction
swinging wildly. I mean, clearly after a month of the conflict in the Middle East with Iran, clearly it's done nothing to impact our supply.
The production of it.
It really hasn't done anything to impact world supply. Russia and China are still, unfortunately, getting their oil delivered through the Strait of Hormuz. Saudi Arabia and other big OPEC countries are delivering their oil through pipelines and other means. The U.S., of course, is net exporter of natural gas and barely imports any oil.
And the speculation of, well, how long is it going to be held up for? And if it's held up for, we talked, I think it was last week's show, on the release of supply, right, through the IEA, International Energy Association.
Yeah.
You see it across all different sectors that have nothing to do with oil. Even.
Yeah. Well,
but you're right. I mean, is it affecting the supply and the production of, especially here in the United States, of
not at all
the producers of oil?
We're increasing supply to beyond what we even need.
Right.
But what I'm saying is, as a reaction, don't overreact. That's what I'm calling for. Is that, yes, you see this, affecting the speculative side of things, and therefore, because of that, now everything is selling off. And again, it's an overreaction.
Yeah.
And it's, again, to me, it's a buying opportunity. Do not panic. I think this is, like I said, overblown, over sensationalized, especially our own media. The left-wing media is rooting for America to fail. That should tell you everything you need to know right there, that our own people, our own politicians are hoping that this destroys, our country economically.
Unemployment, like you just said, is low. The stock market, yes, volatile, but it's not completely way off from its highs. I mean, single digits, 5-6%, maybe 10% from its highs this year. And this is with a war going on, right? This is with the Fed's just meeting recently and saying that we're going to take a pause, and inflation worries come back. So what that tells you is that the resilience of the U.S. stock market and economy is saying pretty much what you said so far, not overreact.
And that's really what I see our job as, whether it's just talking on this radio show or you've hired us as a client, is to, do that heavy lifting so that you don't have to. And I mean, you, the client, don't have to, because
we do all the stress.
We do the worrying.
Yeah.
We go bald.
Yeah.
Worrying for.
Yeah. Just thinking what we should do is just set up our office more like a spa. It's the peak to the trough, and the typical average peak to trough, meaning that in a calendar year, let's say the stock market, whether it's S&P 500 or NASDAQ or whatever it is that you follow, hit a high in February, and then something happened with the market or the world, and everything sold off and hit its absolute low in June, and then it started rallying back up and finished the year, let's say, positive. That measurement from the peak in February to the very low, the valley in June, that's the maximum drawdown. And the typical drawdown in a given year, when you look at averages, is about 14%.
We should fully block the Strait of Hormuz. And you're hearing that here first. That's my opinion. Let me tell you why. Because Russia and Iran rely on Iran. Russia and China rely on Iran for a massive chunk of their energy needs. And they're still getting their tankers freely flowing in and out of the Strait of Hormuz. You block the Strait of Hormuz completely, this is exactly what we need, in my opinion.
Yeah, that's our own fault.
Right? It is our own fault. We don't need
we should have the whole time just connected ourselves with allied countries or neutral countries to be that. But to have our manufacturing and our pharma and stuff like we realized in COVID, and that really stems from these twisted leaders and politicians that line their pockets that we don't see, that go through shell companies and so on and so forth.
And the way we do that
and create longevity
is by having a plan, a written plan, having goals and objectives, your goals and objectives put into writing so that we can manage, you know, the portion of your financial lives that we manage, that we can manage to that plan. And when you have a plan and you have goals and objectives, it makes our job easier to help you not make mistakes. Right?
Yeah,
obviously, with gas prices, but you know
what?
It
depends on how long.
More so,
depends how long this is sustained.
More so in the state of California than in the rest of the nation.
California has had perpetual inflation on gas.
It's not going to impact the nation as a whole as much as it's going to impact Californians. Call 916-967-3500. I was just looking at, the 10-year Treasury, and it hasn't broken through 4.5. It's flirted with 4.5 a little bit.
It's the 10-year Treasury bond, the U.S. Treasury bond, and there's 2 years, 5 years, 10. It goes all the way to 30. But the 10-year Treasury bond is really what's used as a barometer to see where interest rates are at. And, is the bond market signaling inflation, or is it signaling a calming environment? And right now it's been spiking up, which is the worry for some inflation. And how does that directly impact you?
Yeah, the good news is that we really liked fixed income, over the last couple of years, especially when interest rates went up.
Which are bonds?
Because when interest rates go up, as long as you don't have a lot of debt, and most of our retired clients have no debt, then it's an investment opportunity, right?
And because when you're buying individual bonds, then you have actual maturity dates. So it's spelled out. You know how much money you put in, you know how much interest you're getting, because it's basically a contract. Let's say you get a JP Morgan bond or Wells Fargo bond or anything out there that says we're paying 5% in interest. They've collected your money. They have your money in return. They're giving you 5% every year. Now, it doesn't matter what the market's doing or interest rate environment, whether it's going up or down, you're getting 5% every year.
At that seminar, we'll show you more specifically strategies that we're employing, how they've worked, how we think they're going to work, types of investments that are very timely and helpful to most of our clients and could be helpful to you as well, to reaching your goals with the least amount of risk that you possibly could take based on those goals. Again, call 916-967-3500.
Yeah, is all still intact, all showing resilience, which is a good sign for the U.S. markets. We're seeing signs both on Trump and potentially maybe in other nations of negotiations or even just open to talking. So that means that there's at least pathways of finding some de-escalation in all this.
Well, more importantly, you've been listening to the Wise Money Guys, John Scambri and Giuseppe Fiscani. To arrange that no obligation consultation or to register for our April 29th seminar for retirees or people about to retire in Walnut Creek. I hope you have enjoyed listening to the show. Come back and listen to us next weekend. Have a wonderful Saturday. Bye, all.
Have a great weekend.